Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast, Ethical and Sustainable Investing News to Profit By for August 2nd, 2019, presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing information and resources. If you hear any terms that are unfamiliar to you in this podcast, just Google them. Also, you can find a full transcript, live links, and often bonus material to these podcasts at the edition's podcast page located at investingforthesoul.com/podcasts. Now, many sustainable investors are getting excited about investing in water. That is, companies and funds engaged with water in some way. Writing in the New York Times in an article titled, "As Fresh Water Grows Scarcer, it could become a good investment," Tim Gray says, and I quote, "The prospect of shortages in the years ahead could make water a precious commodity. The United Nations Environment Programme has predicted that half the globe's population could face severe water stress by 2030. Annual expenditures of $200 billion, up from a historical average about 40 to 45 billion, are needed now to keep spigots running," the UN said in a 2016 report. End quote. In his article, Mr. Gray discusses several leading funds in this sector. The first is the Allianz GI Global Water Fund, symbol AWTAX, on the Nasdaq. And this is an actively managed fund that holds companies, and quoting the article, that provide products or services to help overcome water scarcity and remedy infrastructure shortcomings. Created in 2008, the Allianz GI Fund returned an annual average of 9.83% over the 10 years that ended in June, compared to 5.37% for its average Morningstar peer. End quote. The second fund he writes about is the Calvert Global Water Fund, symbol FWAX, also on the Nasdaq, which is a passively managed index fund that, and I quote, is divided into 4 subgroups: utilities, infrastructure outfits, technology providers, and efficient users like Taiwan Semiconductor. The fund returned an annual average of 8.56% over the 10 years that ended in June. Close quote. The third series of funds are under the umbrella of Invesco. They have 3 ETFs. Invesco Water Resources ETF, symbol PHO Nasdaq, which holds U.S. companies, and for global holdings, Invesco Global Water ETF, PIO, on the American Stock Exchange. Both are based on Nasdaq indexes. The third fund is the S&P Global Water Index ETF, symbol CGW, on the New York Arca Exchange. The Water Resources and Global Water Funds, and quoting the article, have more focus on companies developing technology around delivering clean water, while the S&P index fund leans more toward utilities, which make up about half of its assets, said J. Jason Bloom, Senior Director of Global Macro ETF Strategy at Invesco. The S&P Global Water Index Fund returned an annual average of 11.05% for the decade that ended in June. Close quote. Mr. Gray mentions two other funds, First Trust Water ETF, that's symbol FIW, also on the New York ARCA, and the Tortoise Global Water ESG Fund, symbol TBLU, on the BATS stock exchange. Points to consider when investing in water include the possibility of regulatory controls and ethical considerations regarding its pricing, especially for poor people. So, though water investing looks attractive, you need to weigh your own ethical values. Continuing the water investment theme, and this being vacation time for many, some listeners might be thinking about cruise lines as an investment. Well, as far as cruise lines go, Tim Nash, writing for Corporate Knights, throws cold water on two of the leading global cruise line companies. Mr. Nash's article was titled, Tim Nash's Sustainable Stock Showdown. Can Plastic Pledges Save Troubled Cruise Lines? In it, he reviews Carnival Corporation, symbol CCL on New York Exchange, and Royal Caribbean Cruises, RCL on the New York Stock Exchange. Mr. Nash writes that Carnival was in the news recently as it pledged to end the use of all single-use plastics by 2021, and that this came a month after the company was fined $20 million for dumping overboard plastic waste near the Bahamas, and prior to that was forced to pay $40 million fine for illegally dumping oil. So is Carnival becoming environmentally conscious, or is this new gesture just a token event? One wonders. Concerning Royal Caribbean, Mr. Nash comments that, and I quote, Royal Caribbean has a dashboard of environmental goals for 2020, such as emissions reductions, sustainable sourcing, and destination stewardship, but it doesn't disclose targets or indicators. End quote. My perspective is that without targets and authoritative independent review of them, it's just greenwashing. In conclusion, Mr. Nash says, quoting him, that the reality is both of these companies have leaky sustainable strategies which could end up costing investors. Carnival Corporation has somewhat better transparency in its reporting with high carbon intensity, a poor CEO to worker pay ratio, and a low tax responsibility. I wouldn't blame sustainable investors for jumping ship. End quote. Most cruise lines are noted for their terrific meals. However, I wonder if any of them are yet offering the Beyond Meat burger. Its stock has been on a tear. It's been one of the most amazing IPOs in history, with its recent stock price over $200, over 8 times its IPO price of May 2nd. Presently low, it's run into some headwinds as company insiders and executives plan to sell stock in a significant secondary stock issue. Some additional treasury stock will be sold too. Again, the conclusion drawn from Beyond Meat's success is the massive interest in meat alternatives, which correspond, generally, to the significant rise in veganism and vegetarianism globally. This trend and investments related to it could become a core holding for ethical and sustainable investors. Among the global food companies best positioned for plant-based food product sales are Unilever, symbol ULVR on the London Stock Exchange, and Nestle, symbol NESN on the Swiss Stock Exchange. This, according to UK-based FAIR, that's FAIRR, a US $5.3 trillion backed investor coalition. And this says Andy Coyne in an article titled Unilever, Nestle among best prepared for plant-based future. Many of you, no doubt, visit the Morningstar site for investment and sustainability information. You'll be happy to know that Morningstar is improving its sustainability rankings. Quoting from an article titled Morningstar Updates Sustainability Rankings, Gabriel Pressler writes on their UK site that the goal is to provide investors with a greater understanding of how the companies in their portfolios are managing their environmental, social, and governance ESG impact compared to their peers. This rating change would allow investors to directly compare companies across industries. End quote. A criticism of mine has long been the need to be able to compare sustainable investing, ESG attributes, etc., across companies in the same or similar industries. So this change is truly welcome. Two other quick bits of potential useful information. For Canadian ethical and sustainable investors, Canada's revamped Responsible Investing Association website offers some terrific new resources. For instance, not only is it easy to find Canadian licensed responsible investing advisors, but investors can find Canadian mutual funds, ETFs, etc., that reflect their values by using the site's new questionnaire feature. Simply go to www.riacanada.ca/RI-marketplace and you'll be able to see the feature right there. The second item is yet another warning about the proceeds of green bonds not going where you think they should be going. In a Financial Times article titled Clearer Metrics Are Needed to Assess Green Bond Authenticity, Joshua Kendall, a senior ESG analyst at Insight Investment, writes that imagine lending money to a company that invests in green projects, and that group then using the proceeds to pay off other debt. That money has no discernible environmental impact, and there is nothing you can do. It is all in the contract. Only a third of green bonds issued in the past 3 years met our 3-stage criteria for sustainable issuance. This leads us to question the quote green bond unquote label, and more generally it could undermine the authenticity of dedicated green bond funds. End quote. The conclusion: before investing in green bonds or green bond funds, be very clear about what they are investing in, and it really does meet with your expectations. So these are my top recent news stories and tips for ethical and sustainable investors. Again, to get all the links or to read the transcript of this podcast and sometimes get additional information too, please go to investingforthesoul.com/podcast and scroll down for this edition. And be sure to click the like and subscribe buttons in iTunes, Apple Podcasts, or wherever you download or listen to this podcast, And please click the share buttons to share this podcast with your friends and family. That way you can help promote not only this podcast, but ethical and sustainable investing globally. And remember, I'm here to help you grow in your investment success and investing in opportunities that reflect your personal values. Please don't hesitate to contact me if you have any questions about the content of this podcast or anything else investment related. I can't say I'll have all the answers for you, and some answers I can't give due to licensing restrictions. But where I can help, I will. Now a big thank you for listening. Come again. My next podcast is August 16th. So bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.